Vamos ahora a analizar la situación en el mercado. Nos acompaña para ello Teresa Keane, Product Director at Alliancebernstein. Good afternoon. Thank you for being with us. Teresa, coming into the final stretch of the year, how are equities doing year to date?
Well, yes, after a relatively calm market in the first half of the year, certainly investors experienced some volatility coming into the third quarter for sure. And much of that instability was caused by growing signs of US economic weakness. And of course, we experienced the unwinding of the yen carry trade, and volatility rose to levels actually not seen since 2022. The Fed then, of course, in September announced aggressive rate cuts, which actually was welcome news. It really meant, and it really reassured investors that inflation could be tamed without tipping the US economy into recession. So what happened at the end of the quarter was that US equities did rebound, US large caps, though they did underperform other regional equities like European equities, Asia Pacific equities, and emerging markets. So on the right-hand side of my chart, you can see that significant reversal going on. In that first half of the year, technology and communication services were really the sectors and industries that drove the market. And in the third quarter, you can see that reversal with defensive sectors like real estate and utilities, which are known for their interest rate sensitivity, really strongly outperforming. So growth underperformed value and minimum volatility in the third quarter, though growth did outperform over the full year-to-date period. So I guess when the dust settled, the MSCI and global equities as a whole, including emerging markets, actually delivered 6.6% for the quarter, bringing the year-to-date gains to 18.7%. So all in all, a good year for equities so far through the end of September, but certainly not without bumps along the way and some significant risks.
Teresa, you have mentioned the weakness in the Magnificent Seven. Are we finally seeing a broadening out of the market?
Well, that's a very good question, actually. Yes, we did see some weakness in the Magnificent Seven. We saw, technology stocks really a large amount of weakness there. As I said, defensive sectors really strongly outperforming. So although that was the case, the S&P did actually rebound and actually came back and delivered quite solid returns as a whole. And we believe that actually that signals that a wider group of companies, a wider group of high-quality companies are actually starting to be rewarded. These companies lagged over the last few quarters. And really investors are becoming more discriminating with regards to not only the Magnificent Seven, but also questioning whether the massive investments into AI will actually deliver sufficient returns over time. And you can see on the right-hand side of my chart, the S&P 500 equal weight index. Now that's more of a proxy for the broader market that actually did outperform the cap-weighted index over the third quarter period. We do expect to see some broadening out to continue and going into 2025 that to be the case.
Teresa, what are valuation looking like and how are you positioned in Alliancebernstein?
Well, valuation is still a key risk today. There's no doubt about that. The Mag 7 in particular are trading at not peak valuations. Valuations have come down. The current premium for the Mag 7 and those top 7 stocks is probably around 59%. Now, when we look at the average premium for those stocks is generally around, should we say, around 37%. But looking at the price to earnings ratio over the next 12 months, we can see a significant discount for non-US stocks in particular, and they are trading at a discount of around 36% today. That discount is normally around 20%. So there is a bigger opportunity within non-US today than there has been. In terms of our positioning, we have been underweight the US and overweight Europe. This has been the case for quite some time, but bear in mind we're not picking stocks by region or by country. We're our bottom-up stock picker, and region and country is a byproduct of that. We're looking for quality, stability and price. We're looking for those names that deliver on that quality. We're looking for quality compounders, stability. We like recurring revenue. We like these companies that are less susceptible to wide market risks. And clearly price will always be important because we're seeking to avoid that crowded trade. Names like that normally, expensive names normally disappoint over the long term. So in terms of some of the transactions that we've taken over the quarter, bearing in mind the market environment, and particularly with regards to valuations and valuations of technology stocks, we've trimmed some of our holdings there. So we've trimmed names like Broadcom, which is the US semiconductor firm, and we added to the UK consumer staples name, Tesco. We also like names, a high quality name like Relics, for example, and that's really delivering good solid growth today. It's also benefiting from its AI related products within legal. And in terms of stability, we like names like Fiserv, which is the integrated payment services company, and Haleon, which is a consumer healthcare company. But what we're seeing as a whole is that there are divergences between industries as well. So within consumer, there is significant dispersion between the high end, the low end. There's dispersion of performance between goods and services. And also within industrials, there are also pockets of weaknesses. We like to play the electrification theme from a bottom-up perspective. So we like names like Prismium, the Italian company, which is really a leader in its field with regards to high voltage cables. So that's where we're seeing the opportunities today. You really have to be a bottom-up stock picker to really pick out where the opportunities are with regards to managing that risk and return profile in this environment.
For finish, Teresa, what is your outlook for the rest of the year?
Our outlook is one of caution, clearly. Equities have done very well as a whole. They've delivered double-digit returns. But there are risks out there in the marketplace today. We've got geopolitical risk that's certainly very, very, very much still there. We also have got the upcoming US election. I did actually grab a slide from our economists. It's research going back to 1937, and it showcases the Dow Jones Industrial Average since that period and how it's done. And if you'd invested in a Republican presidency or a Democrat presidency, how it's done compared to the overall market as a whole. And I guess the point that I'm trying to make here is the importance of staying invested in the market and not trying to time the market or worry about what policies are in place. Clearly, policies will matter, perhaps more so this time around. But as I said, as a whole, the important point here is not to try and time the market or come out of the market, to actually stay invested. And we would like to think that we have a product and a strategy that enables investors to stay in the market. We're seeking to deliver that pattern of performance, participating in the upside and mitigating risk on the downside. And so when equities are rising, and particularly in a moderately rising market environment, in an environment when equities are in the range of 0 to 10%, we have found that our quality, stability and price framework does perform very well. And equally, when the market is falling, we're seeking to mitigate that risk and decline less than the market. But clearly, when the market is experiencing very high growth, we will lag in an environment like that. But overall, we're seeking to deliver that passionate performance for our clients, that participation in the upside, less risk on the downside, outperforming the market as a whole over the long term.
Teresa Keane, Product Director at Alliancebernstein, thank you for joining us.
Thank you very much. Thank you for having me.